I love the pound the table on Nvidia, but I still think we need to wait for the hot money to come out of that one. Too many summer soldiers and sunshine patriots, thank you, Thomas Paine, who need to wave the white flag before the stock can really bottom. I heard it today called no man's land. I like that. Besides, you can find bigger discounts than Nvidia among the other chip makers. First, there's AMD, an on again, off again charitable trust holding. By the way, we'll be talking about it on Thursday at our monthly meeting, and it's now on. Because we started buying some when it sold off in July. AMD actually began its slide in March and is now down close to 40% from its highs. It's the third worst pullback of any chip maker in the S&P 500. Stock's down 26% just from its from the lower high on July 10th, and even after rebounding a few bucks today. Do you know that AMD is down? Do you know it's red for the year? Down for the year. Maybe we came in a little too early for the charitable trust, but we've added the position on the way down because it's not like the fundamental story has changed, and that's what we do. While Nvidia is currently unrivaled in the red-hot AI infrastructure space, AMD's in second place. It's not a close second, but there's nobody in third. And they're the only company on Earth that stands a chance of catching up to the in not-too-distant future, although everyone's pretty understanding the lead that Nvidia has.
In the thrilling world of semiconductors, the winds of change are blowing at gale force, and at the eye of the storm stand two titans, Nvidia and AMD. These companies are locked in a high-stakes dance as they vie for dominance in the explosive and ever-evolving artificial intelligence market. Nvidia, whose stock soared an astounding 2,750% over 5 years, continues to ride the generative AI wave, while AMD, powered by a respectable 380% surge, seeks to carve out a bigger slice of the AI pie. But with high stakes come high drama and questions. Will Nvidia maintain its stratospheric ascent, or could AMD defy the odds to capture the crown? Welcome back, everyone, to Investocracy.
Right, last quarter, though, we saw the market a little bit skittish, not a little, very skittish, actually, around their spending plans. CapEx continues to go up as they build out artificial intelligence infrastructure. What do investors want to see this quarter?
Investors want to see less spending on CapEx, but the challenge is they can't stop. And so we had about $106.2 billion in CapEx spending in the first half of the year, and we're expecting another $60 billion in Q3, taking out the year to $231 billion in CapEx spending. And that means the big winner is going to be Nvidia, the big winner is going to be energy companies on the other end. However, given that it's so hard to compete on AI and cloud, this is really what gives them the advantage. That's why there's only a few winners in this play. And so what investors are hoping for is slower CapEx spending and, of course, more returns on the AI and more returns on the cloud side.
As the conversation turns to the heart of the matter, let's examine the strategies behind the daring dance steps of Nvidia and AMD. Once a veritable leader in gaming GPUs, Nvidia has transformed itself into a colossus of the data center market, boasting a jaw-dropping 87% revenue share from this lucrative segment in its most recent quarter. This isn't just your average waltz. Nvidia is leading a hyper-fast techno-rhythm, with a 98% control of the data center GPU market in the previous year, according to Tech Insights. Meanwhile, AMD remains the underdog, with only 12% of the discrete GPU market share. But don't discount AMD just yet. The company, with its diverse range of x86 CPUs, GPUs, and APUs, is showing some serious stamina. AMD's acquisition of Xilinx in 2022 has added programmable chips to its repertoire, an ace up its sleeve that could play a pivotal role in the server and AI segments. There's a classic stock market joke that goes, how do you make $1 million in the stock market? Start with $2 million. And while humor may gloss over the inherent volatility and uncertainty, it's a fitting reminder of the risks and rewards of investing, particularly when it comes to these tech giants. From a financial standpoint, Nvidia presently boasts a colossal market cap of almost $3,447 billion, with a forward PE ratio of 38. On the other hand, AMD, significantly trailing behind with a market cap of $259 billion, commands a PE ratio of 44. Yet, these numbers beg a crucial question. Which of these chip makers offers better long-term value? When we look into forecasts, analysts predict Nvidia's CAGR for revenue and EPS from fiscal 2024 to 2027 to be 51% and 56% respectively, buoyed by the incessant demand for high-performance data center chips. AMD, however, isn't lagging too dramatically. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Back to the video.
Patrick, let me ask you, because I know you're going to be speaking with AMD CEO Lisa Su shortly. What are you going to ask her, Patrick?
Yeah, a couple of my top questions is how are you going to narrow the gap with NVIDIA? Both companies say that they have the highest performance and they all show benchmarks. AMD has maybe 5-10% market share. NVIDIA has 95 to 90% benchmark. But what is it going to take to significantly narrow the gap? And then when it comes to data center CPUs, while AMD is super strong in hyperscalers, they have single-digit share in enterprise, where, quite frankly, most of the server CPU business is today, which is dominated by Intel. And there are a lot of things that AMD could be doing in there. Typically, it's not best product wins. It's sales, it's enterprise marketing. And AMD up to this point has not made the major investments in that space to be the difference maker.
With an expected CAGR of 20% for revenue and a dazzling 102% for EPS between 2023 and 2026, AMD is poised for substantial growth driven by its promising data center, CPUs, and GPUs. But narratives aren't built on numbers alone. As we prepare for AMD's third-quarter earnings report for fiscal 2024, the stakes are higher than ever. Wall Street anticipates that AMD will report a buoyant 31% increase in EPS to 92 cents, with projected GAAP revenue reaching $6.71 billion. It's a testament to AMD's resilience and forward momentum. Notably, analyst Hans Mosesmann from Rosenblatt Securities is optimistic about AMD's trajectory, forecasting gains in server and GPU segments. And Goldman Sachs, with foresight into AI infrastructure capex and server CPU share, maintains a bullish position on AMD. In the vibrant tapestry of the stock market, Nvidia and AMD emerge as intriguing participants. They are poised on the precipice of a revolutionary AI movement that continues to forge ahead at breakneck speed. Both companies exemplify the innovative spirit that defines the semiconductor industry, all while contributing to the broader narrative of technological evolution. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
AMD, I think they're basically the strongest competitor to NVIDIA. They don't necessarily have the same software on their chips for the AI, but they are the closest to them. And we saw Taiwan Semi a week ago just have absolute blowout numbers. And everyone's attributing all of that to NVIDIA, but they also make chips for AMD. So this is a strong player. I talked about AWS, the cloud build out, the data center build out. That is another thing that AMD is benefiting from. So they are in there. They are a part of this AI revolution, this AI surge, if you will. And so they should not be forgotten. They should not be taken for granted here. And I think very possible they're going to have a very strong quarter.
All right, let's see. It is noted that this is the huge competitor to NVIDIA, but the prices have been going in different directions. Rick?
Yeah, once again, kind of a more triangular shape here, but depending on how you look at it, because trend lines are subjective, you may have somewhat of a different read, depending on which one you think is more important. For starters, off of these highs, 227, connecting these subsequent highs, we have our blue dashed line here. By that measure, the trend has been broken to the downside here. We have pushed up above it. And note as well that this old resistance became supportive many times here. So even after a trend line is broken, it can come back into play in a similar way, serving as the opposite of what it originally was. So old support becomes new resistance, old resistance becomes new support, etc. So, but another measure though, you could see that we had this gap down here, and that was a significant move, a significant breakdown, and you could draw a different trend line. This white trend line here, more shallow sloped, but in this case, we did fail here. We failed at this red line, which happened to be the same level as the low point before we had a gap down. So around 174.50 was kind of a failure point for us here. So it kind of depends on how you're looking at it. Either way, moving averages clustering together suggests lack of directional conviction here. We are kind of in between two of them right now, our 21 and 63-day EMA kind of hoping to push above them for the bulls here. RSI also interrupted below the 50 midline, green trend line broken. If we were to move lower, recent lows line up with purple 250 2-day EMA near 148. From there, not a whole lot to stop us until we get to this volume node lining up with these lows here. To the upside, volume profile point of control, then our red line I mentioned before at 163 and 174.50 approximately.
So, where does this energetic stock defense leave investors? For those yearning to harness the AI surge, Nvidia stands out with its firm grip on the robust data center market and long-term growth potential. But make no mistake, AMD's agility and diverse chip portfolio, in conjunction with its ongoing efforts to reclaim substantial market share, position it as a compelling contender. The dynamism of the semiconductor sector is a testament to its inherent unpredictability and boundless potential. As analysts enthuse over Nvidia's simpler business model and AMD's transformative potential, investors must weigh these insights against their risk appetite and market outlook, possibly their next astute move in the semiconductor chess game. In conclusion, as the semiconductor saga unfolds, there is no denying that both Nvidia and AMD offer exciting prospects for investors. Share your thoughts and insights. Which titan captures your interest as the ideal AI investment in this roaring market, and why? Engage with us as we continue to watch these dynamic and captivating stories develop. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.